All right, as we bring on Gary Mastrodonato again, the principal of, Masters Wealth Management, and of course, this star of Mastering Your Money here on the Talk Station, which you'll hear Friday evening and over the weekend as well. Gary, good afternoon to you. And what in the world is going on the stock market?
Well, it's following the news minute by minute because the market's so volatile, as is the economy, by the way. And with the tariffs, they're putting a lot of blame on the tariffs for the sell-offs and the disruptions in the marketplace. The things that we have to be careful about is the market rallied substantially ever since the president said he's removing the tariffs for about 90 days, I think is what the story says.
Right. Yep.
And that 90-day removal all of a sudden put spark in the market that people were waiting for. Now, you mentioned the Harvard grads and the smart people and all that stuff, and they had a lot of pressure from Jamie Dimon and Ackerman the last few days about, even Jim Cramer in the morning would be bad-talking the markets. Elon Musk was saying it's too much right now. They're trying to get a little life back into the system. And sure enough, that 90-day reprieve did it. But I remind the listener, it's a short-term bounce, okay? A very short-term bounce. I wouldn't bet the market on it. I wouldn't bet the farm on it because there's a lot of other indicators that we look at.
Okay.
I was talking to Ray Dalio, the largest hedge fund manager in the U.S. and one of the biggest in the world out of Connecticut, and he just retired from Bridgestone Capital, or Bridgewater Capital, sorry. And he is a brilliant man, and we talked a lot when I used to live in Connecticut. And he is, he said just a couple days ago, he said the tariff problem is the least of the problems in the market, what's bringing it down. So he said, even if the tariffs are removed, don't think we're out of the woods. We are not. It's a lot deeper than that. And that's the thing I want the listener to understand. Pegged by this, we all, in the industry, I've been in the industry 45 years. Mm-hmm. We always watch the treasury markets, the bond markets, have a lot to say about what goes on in the overall markets.
All right.
And the wild swings in treasuries have the investors worried something is about to blow up in markets because even though the market rallied substantially today on the news, interestingly, bond prices fell, yields went up. And when yields go up, bond prices fall. Mm-hmm. So if you want the safe haven on the bond side, which a lot of people try to do when you've got a rough market, they lost money on that side at the same time. But the bond should have followed what the market did. The yield should have fallen a lot with the news, but they did not. They went in the opposite direction. So that tells me there's a lot more recession opportunity to come than probably ever before. And that's the big thing we need to be watching is the recession word. It's going to put havoc into the market and other cash flows that go in and out of things. So, yeah, you got a knee-jerk reaction today. I'm not sure if you'll see a big follow-through tomorrow. If not, but you'll probably see a sell-off, in my opinion. But I can't predict markets. Nobody can. I'm just talking from historical reactions of how markets, how the wind blows. I always use the analogy, Lockwood. I'm a sailor.
Uh-huh.
And before I go out sailing, I'll listen and take the weather reports. And the weather reports are what you see from the talking heads on television and radio. I happen to be one of them, but I think I'm a different kind of a talking head. Mm-hmm. But on the same token, I'll get the weather report, I take notice of it. But the real report that I see is when I'm behind the helm of the sailboat, I'm looking up at the sky and feeling the winds and watching what's going on around me with the waves and the water and the flow of what's going on out there. That's the real determinant of what I'm looking at beyond that weather report. And that's what I'm looking at here. The smart people are coming out saying, when those tariffs go away, this market will rebound. But yet there's more to the story, and the story is not good, in my opinion. So my message on the Mastering Your Money show is always, let's keep your money safer,
right?
Especially if you're at or near retirement. Why would you want to take the risk of putting the uncertainty on your shoulders when you're about to retire? Mm-hmm. And what's happening now is you got sequence of returns risk prior to the rally today, and I think you're going to see the market tail back down again. And if indeed the tariffs come back on in 90 days, does that mean we're going to reset this thing all over again? We don't know. We don't know what that's going to do. But you need to protect your own money. You work 40, the average retiree, Lockwood, is going to work 40, 45 years before he retires. And that's a lot of work and a lot of hard effort. And he puts his hard-earned money into the market, and then he retires and watches it dissipate. So
right.
You got to be safe and you got to be smart about watching your money and protecting the money right now. And that's the bottom line.
I've got to. Well, let me just interrupt. I've got to commend you because you have. I listen to your program every week, and you have been consistent in your, and not. I've got to be very cautious how I describe this. Not fear mongering, but just your cautious approach. You've been saying this for quite some time, and of course, there is one other small. I say this tongue in cheek. One other small rock in the room, and that's a $36 trillion deficit along with all the trade surpluses. So,
well, it's huge.
Yeah.
We're in a big mess. Big mess. And I hate to say this out loud, but I hate to say the R word, the recession word, but I wouldn't be very surprised if the United States and for the world economy to go into a recession because the other economies are weak as well.
Right.
It's very frail out there in the marketplace. So people sit back right now saying, thank God it came back up today. Now you can go out and relax. Let's go buy that car. Let's go buy that house. Let's go do this and that. You should do it anyway if you got the money to do it, but don't predict and don't depend upon the market for the returns that you're going to get. And if you're about to retire, I've been in this game 45 years. We specialize in retirement distribution. That's why you hear the same story every week, because that story, Lockwood, has not changed. I told Jeff Shade, my co-host, the other day, I said, go back 10 years, pull out a show that we did 10 years ago, and play the show. And if the dates weren't different, the message is absolutely identical. There might be a few modifications in what's going on with the market or a particular item, but the message never changes. People want to retire. They want to not outlive their money. That's the important thing. They want to keep their money safer. That's the important thing. They don't need to shoot the lights out. There's a difference between a gambler and an investor.
Right.
The gambler is looking day to day like today. I mean, the gambler's out there having a ball. The investor should not have to worry about what goes on a day-to-day basis. Like a Warren Buffett, he's looking long-term, and we look long-term. My message 10 years ago is no different than it is today. It's the same message. We want our money saved. We want to plan for long-term care because as we get older, that's the real reason people run out of money is long-term care or living too long, and your health changes along the way, and that costs money. And then taxes, rising taxes is another factor that people run out of money with. Taxes are rising.
Right.
And, the retiree has to think, like, the older that they get and the more money that they piled up in their retirement plans, there's something called the RMD, the required minimum distribution. That's the tax part.
Right.
That comes out at 73. And when, people are accumulating $1 million, $2 million down their IRAs, their RMDs are pretty sizable. First year, it's about 4.5%, 5% of the account value. You got $1 million. You're forced to take $50,000 out. You may not want to take out. I always tell clients this: there's two names on your statement. There's your name and the name of Uncle Sam.
Uncle Sam.
And they don't see Uncle Sam. I do. I call it the master glass. When I look at your statement, Mr. Jones, I'm looking at it through the eyes of a master glass. You're not. You're seeing a million. They'll come into my office waving so proudly. Look, I get my IRA hit $1 million. I said, great. Uncle Sam thanks you because he owns half of that right now.
You're right.
And so those are the things that you got to be worried about. If I were retired, I probably would not have too much, if anything, in the market. I'd be much more safer, and follow what we call the master plan or a plan similar to that. We specialize in distribution. That's where you got to be, and you have to know the game. The rules change when you retire.
Right.
When you retire, it's a totally different game, and the smart guys on Wall Street are only worried about their trades because remember they earn their money, Lockwood, on money under management. It's 1%. If you're pulling your money out, they're not making money. So they want your money right back in the market in a hurry. That's why the big boys came out, like Ackerman and these other people, said, hey, we want to see the money back in. We want the tariff word to go away. We want to see rallies because we make money when the market rallies. We make money when people pour into the market. Look at the numbers that have come out in 401ks in the last 4 or 5 weeks, it's in the multi-billions, trillions probably. I don't have that exact number in front of me, but the Wall Street people, Jim Cramer the other day said the same thing. He said, I don't like what's going on with this president. He should have done it a little bit at a time. A little bit at a time. Well, I don't understand what's going on with tariffs to that extent, but tariffs is a war. We do have a trade war going on, and basically they're in a ceasefire, as I call it, for the next 90 days. But that can change any moment. I mean, if another country comes in and drops an A-bomb with a higher tariff, don't be surprised to see some of that country get hit with another tariff. So we don't know where it's going. But don't watch the tariff news. Watch your account. Watch things that you can control. You can't control what the market does. And your retirement should certainly not depend upon the market controlling your money. You should control your money at all times.
You pointed out there's something that's very important. You said that, and you have said consistently in your radio programs, you're not all that comfortable with the market right now. You've alluded to the possibility of recessions, and in past you said that because it has been such a significant run-up in values, and it's cyclical. It eventually does have to come back to earth, and so very interesting observation. And then basically the whole aspect of this issue of the tariffs is that is a kind of a distraction for what is really behind the problems within the market, and of course the surplus and the deficit. So I think that's an important story.
Yeah, you hit it right on the head there, Lockwood.
Well, I've been listening to.
It is a distraction because people are looking at the wrong items.
Well,
you want to be looking at the longer term aspect of a happy life.
All right,
and you got to be able to control what you're doing. You control your family in your own home. You got to control your money in your own account.
All right,
and don't depend on the government to get you through. You look back the last 3 or 4 years. The big rallies in the market have all been from what they call the Magnificent Seven, right? I mean, the Apples, the Amazon, all that, all that. Tesla, they're burning. The people are
destroying them,
penalizing Tesla, because of Musk. So, they're burning Teslas down. They're blowing up the Tesla station, the charging stations. It's crazy out there.
It is
with what the other side is doing, and it's scary.
It is.
I want to buy a Tesla. I like Teslas. I want to buy a Tesla, and I'm afraid they're going to come to my driveway and burn my house down.
Exactly.
Burn my house down.
Exactly.
So